Hi there, this is Sandra with a Mortgage Center. Another important announcement from my office. If you haven't noticed, the cost of everything has gone up. And actually, Statistics Canada just released some numbers on inflation this week, and it's been the highest in almost 2 decades. So it's funny because as soon as that information came out on the Newswire, I probably got 5 or 6 emails from people. Should I lock in my variable rate mortgage? What should I be doing? This is timely information for you. So, what does this actually mean when inflation goes up for mortgage rates and what you should be doing on your mortgage? So, although none of us can forecast the future, the information that I'm sharing with you today is just based on some good sense recommendations. Um, it's also not only we keep track of this at our office, but we've also helped thousands of people get ahead with their mortgage. So this is just based on some of the information that I've been reading, we see at our office, and so here it goes. Just a quick refresher on variable rate mortgages and fixed rate mortgages and how they're set. So, fixed rate mortgages are based off of the Bank of Canada bond market. And there's a link in this message to show you where we actually look. And the Bank of Canada 5-year bond yield drives 5-year fixed rate mortgages. So about a month ago, I reported back to you and said, okay, we're starting to see yields go up if you're thinking about doing anything with your mortgage now, especially if you're looking at a fixed rate mortgage, now is the time to do it. So as yields go up on the bond market, that in turn triggers 5-year fixed rates to go up. And there's usually like a 2 or 3 week lag. So we've got a little bit of a warning sign there. And what drives yields up on the bond market is investor sentiment about inflation. Okay. So again, the investors knew that this announcement was coming. We all knew that the cost of living is going up. That doesn't surprise us. On the other hand, variable rate mortgages are based on the Bank of Canada overnight lending rate. And this is the rate that influences mortgage prime rates. And the Bank of Canada uses the overnight lending rate to cool inflation. So obviously, when inflation is going up, they raise rates to encourage spending. They keep rates low, or as we know, we've been in a pandemic for almost 2 years, so they're keeping rates low. So for those of you who have variable rate mortgages, we've likely discussed this idea when you chose a variable rate mortgage, is that rates are artificially low. The Bank of Canada will likely increase rates. Like some economists are saying, spring 2022. It may be earlier. The economists are recommending slow and gradual rate increases. So, how many times and how much of a rate increase really depends. So historically, rate increases have been gradual by 0.15 or 0.25. So many of you have a variable rate mortgage that's somewhere in the area of mortgage prime, which is 2.45 minus 1%. So you're at 1.45%. However, fixed rate mortgages right now, a 5-year fixed rate is about on average 2.5%. Okay. So should you like, do you choose to lock in your variable rate mortgage, or should you choose a fixed or variable rate mortgage? Well, that kind of depends. So if you have a variable rate mortgage, and let's just say the interest rate will have to increase by 1% for you to remain where the current 5-year fixed rates are. So what do you do with your fixed or variable rate mortgage? Should you lock in your variable rate mortgage? Really, that depends. And I mean, full disclosure for you guys, I have a variable rate mortgage. I am not locking in my variable rate mortgage. However, I might be more risk adverse than you are. One of the things that I am doing with my variable rate mortgage is I've contacted my financial institution and I've asked them to increase my payment by using my prepayment so that more goes towards the principal, and I'm going to be able to pay off more on the principal while rates are low. And then on my rentals, of course, I always have fixed rate mortgages. So here are some of the considerations that you need to take into account if you're, like deciding whether or not fixed or variable, or should I lock in on my variable rate mortgage. What's your financial future? Do you have strong double income family or is your debt to income ratio low? If you are in that situation, you could probably benefit from a variable rate mortgage and increase the payment to shorten the amortization so you can pay off that mortgage quicker. If you're someone who, is having a hard time paying off your credit card or your line of credit debt and you just can't seem to get that nipped, the lower rate on the variable rate mortgage might be tempting. So what you want to do is you'll want to focus on paying off the credit card and line of credit debt first. You can call us, we can help you consolidate that into your mortgage or just, you know, good old school, just pay it off. Um, so that's another consideration. If you are risk adverse, paying a little higher in the fixed rate mortgage will allow you to sleep at night. So there's nothing worse than not being able to sleep at night because you're worried about where rates are going, and you're concerned about your overall monthly mortgage payment going up. Then lock into a fixed rate mortgage, or pay a little bit extra now for the comfort in a fixed rate mortgage. Okay. So locking in from a variable to a fixed rate mortgage is super easy. You can just contact your financial institution directly via email or call through the call center. Super easy. There's no penalty. If you would like us to help you with that, we can also do that. We will ask you to sign a broker consent form that allows that allows us actually to contact your lender on your behalf, and we can help you lock that in. I just wanted to wrap up to say how much we love helping people. We actually do. We do a great job. And I know we've helped many of you get ahead. Wouldn't you want your friends and family to have that same opportunity? So, what I'm asking for you from you today is we'd love the opportunity to help your friends, family, and work colleagues. If you have an opportunity to mention us as a referral, we would love to seize that opportunity to help them. You can always contact me. You can go to my website at skipthebank.ca, book an appointment through there, or all my contact information is there, and you can just email me or connect through any of our social media sites. Thanks so much, and we'll chat soon. Bye.